Welcome to 7:30. I'm Sabra Lane, filling in again for Lee Sales. There was a time when Australians assumed that the job of a financial planner was to give them honest, reliable advice that would be in the customer's best interests. But the recent scandals that have engulfed the Commonwealth and National Australia banks have put paid to that. Thousands of clients were given dodgy advice and lost millions of dollars in assets and savings. The banks have blamed rogue advisors, but a growing body of evidence suggests a systemic problem due to poor governance, lax controls and scant accountability. We recently learned that NAB had quietly sacked 41 of its financial advisors and compensated 53 clients. But hundreds more customers have received no compensation, and some of the sacked advisors are still in the business. Matt Peacock has this report.
Danielle Wilkie wrote from one of National Australia Bank's top financial advisors.
We just wanted to do something safe to try and get ahead, and thinking that you're banking with the NAB, well, aren't they one of the top 5 banks in Australia? So I thought we'd be safe, so off we went to see him.
2 years later, she faced financial ruin. She and her husband pulled their twin girls out of their private school and nearly lost their house.
It's taken a big toll. It has.
And it must have made you feel very upset.
Oh, for years. For years it was a struggle to know that we'd done this to our girls. that we weren't going to give them the life that we thought we would.
Veronicalston also became mired in debt, investing her inheritance and taking multiple loans on the advice of the same NAB financial advisor.
I started having lots of bills where I couldn't actually pay, and I was using my credit card all the time to pay bills and for food and petrol and other expenses, being a single parent and looking after my daughter. So basically I was blowing out completely, and I contacted my financial advisor and was letting him know the situation that I was in. And his recommendation was, I've discussed it with the personal banker, and we can just give you an extra $20,000.
The man who advised both women was Graham Cowper, then one of NAB's top performing financial planners.
He was a lovely man. We knew about his kids, we knew about his wife, other issues in his life he would tell us about. He was the best salesman. Oh.
And what was he like?
Extremely confident and well-dressed, and quite a big ego from what I could.
Veronicalston gave evidence about Graham Cowper's modus operandi to the Senate inquiry into financial advice.
Yeah, I was also very vulnerable at that stage, and I didn't have any support from anyone to help me make any decisions. And I was going on face value of what he was trying to explain to me.
I actually met him across Veronica's dining room table when he came out to see her. And when I listened to him, of course, the jargon he was talking was gibberish. And the plan he prepared was absolute rubbish. So the quality of planning is appalling. But people like that are obviously very persuasive because he was their top planner in terms of sales. So when I sat down and looked at the plan before we met with Mr. Cowper, I went through it and I said to Veronica, what did he tell you about fees? And she said, there was a $2,200 plan for nothing else. And then I showed Veronica the page and I said, well, here's the fee page in the SOA. There's $10,000 of fees here.
According to a leaked document written for NAB Wealth's Andrew Hagger last year, NAB Wealth has encountered and continues to encounter cases of inappropriate advice and occasionally rogue advisors. It said in 2010 Graham Cowper had been terminated for file reconstruction and compliance.
Okay, you said that Mr. Cowper has moved on. You wrote to his client some 470 was the figure I heard, or 430. How many did you have?
We wrote to all the clients letting know he'd resigned. We went to 431 clients and did file reviews on 431 of his active clients.
You wrote to them and said he had resigned.
Right, and we went and did file reviews.
Was that a pushed resignation, as the Mr. Hager's summary says? Forced resignation? I can quote you from your thing.
Yes, it was, Senator Williams.
So you wrote to his client, said he has resigned and left the institution. In actual fact, you threw him out the door.
Well, this is my point, Senator Williams. I think that we're saying that our processes of today are different to our processes back then, and with the benefit of hindsight, that letter should have been worded differently.
The internal bank documents show that he was terminated for file reconstruction. Now, in that situation, for the bank to say that they reviewed 341 files is a ludicrous statement. It's quite clear they did not speak to the clients, and so how do they know that they could rely on anything that was written in those files?
Graham Cowper's continued to give financial advice since his departure from NAB, most recently for the AMP company IPAC, which says since the leak of the NAB document naming him, he's been on paid leave while his cases are reviewed. This morning, we tried to put some questions to him at his home.
Hello. Hello, Mr. Cowper.
Yes.
Matt Peacock here from ABC 730.
He refused to be interviewed but told me all the allegations are false and he'd be making a statement in due course.
They trusted him, I think, because they trusted NAB. It's a big institution. It's the same with CBA. People trust the big institutions, and these people are representing those institutions, and the institutions turn them loose. But the advice was appalling. In every case that I've seen so far, there's been excessive gearing, far too much borrowing that people couldn't service, and substantial losses that have ruined people's lives.
Before the Senate hearing, NAB's Andrew Hager apologised to Veronicalston.
Her treatment by NAB was not fair, and she should not have been treated that way.
Some clients I know who've complained were turned away with nothing. They've complained about Cowper. NAB knew he was a rogue planner. NAB knew he'd done the wrong thing. But because these clients weren't forceful enough to push their argument, they got nothing. And I would say the rest of his clients who didn't complain were never contacted.
They shouldn't be allowed to get away with it. ASIC, someone has to be in control of what these banks put people into. You know, we're not the big rich people that can afford to lose the money that we lost. You know, who takes care of the little people?
Danielle Wilkie and her husband did receive compensation from NAB, but it was only a fraction of what they've lost. And hundreds of others advised by Graham Cowper have received nothing.
I just want the money that we had to put on a mortgage back, and you know, I just want to be back to the day that I walked into their office. Financially, emotionally, I don't think there would be no amount payable to fix the harm it's done for the last 7 years. But if I could get back to where we were before we walked into those doors, that would be nice.
This month, the federal government's new Register of Financial Advisors comes into action, designed to alert the public where concerns exist. But Graham Cowper won't be on it.
He simply won't show up because he was never banned. And nor will, it would appear, any of the other 40 planners who were bad enough for NAB to either sack or, as they put it, move on.
From meeting him, the last 7 years has been the worst financially, emotionally, years of my life. I'll never get them back. I'll never get them back for my children. Seeing, you know, how upset they are when they see me so upset, yeah, and it's just because it's money, and yeah, it's not fair.
Matt Peacock with that report produced by Jacqueline Holm. In 2007, the Coalition's work choices policy was blamed in part for the Howard government's defeat. Tony Abbott later promised that WorkChoices was dead, buried and cremated. But industrial relations reform is still on the table, with a report by the Productivity Commission due later this year. Among other things, it'll look at minimum pay, penalty rates and unfair dismissal laws, although the Prime Minister's promised any changes will be taken to voters at the next election for a mandate. Employer groups and the unions say it's time to bring on the debate about IR reform. Jed Carney is the president of the peak union body, the ACTU, and Kate Carnell is the chief executive of the Australian Chamber of Commerce and Industry. Jed Carney, Kate Carnell, thank you very much for talking to 730. Can I start by asking you each, what do you both see as the most critical issues facing industrial relations in Australia right now? First to you, Kate.
Look, for us, very clearly, it's about helping small to medium businesses employ, particularly younger people, but also older people as well. We've got 815,000 employing small to medium businesses in Australia. If all of those, or half of those, employed one extra young person, we could employ the 300,000 young people that currently don't have a job. We just can't let the scenario happen at the moment where youth unemployment continues to grow, and we've got lots of small to medium businesses that really want to employ but find it too difficult under the current system.
Jed?
Well, I don't disagree with Kate in that we need to work on things like youth unemployment, very important. But the way I see it is that what we need to do is we need to increase economic growth, you increase productivity, businesses grow, the economy grows, and that is the way that businesses employ more people. I think what we're really battling right now is a lot of myths around the fact that if you cut wages or you cut working conditions, you get rid of the Fair Work Act, that you will be able to employ more people. That is not how economies grow.
I wonder whether you can both agree on a couple of points. A minimum safety net for low-paid workers, and for some industries it's critical that penalty rates stay in place, especially I'm thinking of nurses and emergency services workers, to ensure that people are well compensated for the weird hours that they work.
Look, we'd agree. We have no ambition to change traditional, I suppose, industries like nurses, fireys and others that have traditionally been 24/7 type professions, I suppose. These professions are covered by enterprise agreements, so the only way you can really change them is having agreement between the unions and the employers in these spaces. They don't tend to be award-based. What we're talking about is industries that have changed significantly: hospitality, retail, tourism, those sorts of industries that are now 24/7, now need to be open weekends and public holidays because we want them to be, and we need to change their penalty rates, their approaches to allow employers to employ young people and not so young people to take those jobs.
Just on that point of penalty rates, Jed Carney, penalty rates for Sundays for industries like hospitality, the hospitality sector, double time on Sundays. Kate Carnell would argue that those things suited the past in a different era. Why can't we change those things now?
Well, I think you actually hit on it before, Sabra, when you said it's okay to pay penalty rates for nurses, for emergency workers. Why do we pay those penalty rates? Because we value that all-important time on the weekends. We do not work in a 24/7 society. Weekends are still very much valued and very sacrosanct. So why are they any less important for people who work in hospitality or retail? It's not. And going to your question, I don't really, however you want to couch it, whether we pay too much on Sundays or too much on public holidays, the fact is you are advocating, by saying cutting penalty rates, you are advocating to cut the wages of the lowest paid people.
Kate, I can see you're anxious to jump in. You're anxious.
Oh, look, the reason I'm anxious to jump in is that if businesses aren't open, nobody's getting paid anything. And that's the dilemma at the moment. So many businesses simply can't afford to open on Sundays or public holidays, but would like to open. A shopping centre owner that I spoke to recently indicated that in his shopping centres, 50% of businesses didn't open on the Sundays running up until Christmas, even though it's the busiest time of the year. The reason for that is it was too expensive to open. Now, if you're not open, you can't pay anybody. And what we've got to do is allow these businesses to open so that they can employ those 300,000 young people without jobs.
Jed Carney, isn't that the point too, that Sundays, community attitudes have changed? Sundays used to be a time when many Australians went to church and it was sacrosanct, but we've moved on, we've got trading on weekends, things have changed. Don't the industrial relations laws need to keep up with modern times?
Curiously, around 70% of the workforce still work Monday to Friday and have for over a decade. You know, those figures haven't really changed. So to say that working life has changed is not actually quite true. People still value their weekends, that is true. People still get married on weekends, we have major sporting events, etc., etc. So people still do value their weekends. But Kate's little story is just that.
Once upon a time, I think it was in the 1950s, 44% of people went to church on Sundays. That's gone down to 17%. And of younger people, who often are the ones who work weekends, that's 9% of 17%. So they're simply not going to church anymore. So it's hard to see the difference between Saturdays and Sundays.
You both agree that youth unemployment is a huge problem right now. I mean, the rate's something like 14%, 300,000 young people who haven't got a job. In some cities it's as high as 20% and even higher than that. What's the solution to that, Jed Carney?
Well, I know Kate's going to say pay them less and make it easier to sack them. That's basically what the Chamber of Commerce say, pay them less and get rid of unfair dismissal. But the best way, as I said before, to get young people employed is to make sure, A, there are jobs for them. So let's really stimulate the economy, grow the economy. Let's make sure they have skills and training, that we can invest in skills and training and not cut out of that sector. We need our young people to have the skills that Kate's people need to employ them. Let's make sure we spend any money that we have as an economy investing in long-term nation-building projects like infrastructure that use local producers, that employ local people, including young people, that have apprenticeships, so young people get apprenticeships. You know, let's really have a positive agenda rather than just saying cut, because ultimately you can't cut your way to growth.
Kate Carnell, right of reply. All you want to do is sack them and put down the...